Good morning, everybody. Welcome to Windsor Brokers live daily market outlook session. Today is Tuesday, 22nd of January 2013, and we are just in the period after the release of Bank of Japan's data. Basically, the Bank of Japan announced today its most determined effort to yet to end years of economic stagnation, saying it would switch to an open-ended commitment to buying assets next year and double its inflation target to 2%. It promised to reach the inflation goal at the earliest possible time. The steps represent the latest unorthodox effort by leading central bank to support a weak recovery from the global financial crisis. Although in Japan's case, the country is also trying to overcome nearly 2 decades of low-grade deflation. The Bank of Japan's break from an earlier policy of topping up lending and asset buying program launched in October 2010 follows weeks of relentless pressure from new Prime Minister Abe for a greater push to lift an economy out of recession. In a joint statement with the government, it affirmed a well-flagged move to commit to the inflation target. Consumer price inflation has reached 2% in only a handful of months since the late 1990s. But aware that markets had already factored in the new price goals and more asset buying, and that merely meeting those expectations could trigger a negative reaction, central bankers took steps that several analysts thought would only come later. The good news comments say that good news for once that Bank of Japan has been more aggressive than the market expected. And also central bank said that from 2014 it would switch it to an open-ended approach of buying a certain amount of assets, approximately 13 trillion yen, or equivalent to 144.7 billion US dollars each month, without setting a deadline for completing the purchases. As immediate reaction, dollar jumped higher against Japanese yen, hitting 90.10. That was all seen on the post-data action, and since then the dollar weakened against the Japanese yen and cracked 89. Support that, along with the negative near-term technicals, now sees more focus towards the upside, towards the downside. Basically, this was the target of Bank of Japan's officials to reduce and stop the recent strong weakness of Japanese yen that reached its lowest levels in the past 2.5 years, with the latest one seen yesterday at 90.25. From the other side, the dollar hits session lows versus the other currencies, especially the we're talking about dollar Swiss dollar index also, while euro jumps higher of 133 base, where the temporary support was found. Still on the larger picture, still we're in the range trading, range defined on the downside by 132.55 and the upside 134.00, but near-term structure now shifted turned more positive and shifted the focus towards the upside. Cable from the other side remains the top loser as continues to trend lower and travel south, with the break of yesterday's low and the previous low of November 2012 at 158.26, hitting 158.05, approaching the psychological support. The more risk is seen now of breaking below the recent 4 months range that was defined on the downside by 158.26, with the clear break here setting scope for a fresh leg lower of the dollar Swiss, of the British pound against dollar. I do apologize. As we said, the dollar yen is now in the back foot, currently trading at around 89, while dollar Swiss is trading around the 93 support. This is quite strong support and the recent range floor, and the risk seen on the break lower, as near-term hourly structure is still holding negative elements, risking a further reversal and delaying in the recent bulls that are en route towards 94, our initial upside target. However, holding above 93 keeps the near-term positive tone in play. a brief look at crude oil that holds its positive tone, holding around 95.00 off recent highs at 95, pardon. It's approximately 96, I would say 96.02 exactly. While gold benefited again of the recent situation on the weaker dollar, and jumped again towards recent highs, 1694 seen so far versus 1697 peak of 1697 peak of 17th of January 2012. More focus is still seen towards the downside, towards the upside. I do apologize. A quick look at today's calendar. As I said, Japanese data have already been released. The more significant coming, and also significant, pardon, data coming from Eurozone and the United States, starting with the public sector net borrowing from United Kingdom. At 9:30 GMT, 13.5 billion sterling is seen forecasted in December, below the November's release at 15.3 billion, showing a decline in the public sector borrowing. ZOO economic sentiment data for Germany and the Eurozone are due at 10 o'clock GMT, and it's quite interesting as quite positive and optimistic forecasts are seen in both cases. Germany is expected to jump in January to 12.2 compared to 6.9 in December 2012, and even bigger increase is seen at in Eurozones, forecasted at 14.1 versus 7.6. We need to see the final release, whether it's going to comply with the current optimistic forecast or is going to show some softer figures. That would be quite good and supportive for Euro and the Eurozone itself, as this will be another signal of possible recovery. Of course, with the PMI data coming later in the week, it will be one of the main indicators of the situation in the and the health of the Eurozone economies of each country on their own, and of course the Eurozone as a bloc itself. Still, after the ZOO data, we have at 11 o'clock industrial order expectations from the UK -9 compared to -12 forecast versus December release. And then from across the ocean, Canadian retail sales due at 13:30 for November, -0.2%, declining for 0.7% in October, while core retail sales are also expected lower in November. 0.1% is the forecast compared to 0.5% in the month of October. ECOFIN meeting is still underway today, and I think tomorrow also. While Richmond Manufacturing Index for January from United States due at 1500 GMT, forecast is 4 versus 5 in December. Existing home sales more significant release at the same time, 5.11 million homes seen sold in December, according to the forecast, compared to 5.04 million in the month of November. As we can see, this is flagged as red, so quite important release, along with the ZOO, German ZOO, and of course the European one. And that's all from today's calendar. We're going to take a look now at the technicals, and a more detailed look at the technicals, and see the latest developments in the markets post Bank of Japan data release. As dollar weakened significantly versus the majors, Euro benefited on this, finding a good support at 133, psychological support, attempting to build a higher base here of the recent range floor at 132.55, with the near-term focus now being shifted towards the upside. We can see that hourly indicators moved into the positive territory. So far, 76.4% of the latest downleg from 132.97 to 132.79 has been retraced. That bounced to 133.70 earlier this morning, and that was all seen so far. Corrective action is seen on the overbought hourly RSI that is now moving lower. I would say ideally the support should be found somewhere up approximately at 133.30-40 zone, previous highs, and the 10 days exponential moving average, in order to keep to maintain immediate positive tone established of 133.00. From the other side, larger picture still shows the pair entrenched within the range, 132.55 on the downside, 134 on the upside. So far, the opinions are quite split among the investors and the analysts, as some of them still see the positive sentiment in play for a possible push through 134.00 and resumption of the larger uptrend, while a number of commentators sees that this was all for now, and possibly stronger downside reaction is quite likely at this point. From the technical points, the 4-hour structure is still weak. As we can see, most of indicators are descending now, and they're still keeping the downside vulnerable, though the recent bounce higher is reducing the immediate downside risk as the price broke above 133.22, currently 4-hour 20 days exponential moving average approaching the upper Bollinger Band, which is approximately at 133.80, while holding above 133 still keeps focus at the upside. In case of reversal, as we said, of the current corrective action approximately at 133.30.40, that's seen as ideal reversal point. Focus will still keep the upper boundaries in focus for possible attack at strong 134.00 support. Otherwise, break below 133.30, where are also the moving averages 10, 20, and 55 days one that are currently underpinning the rally, as slower ones already crossed. Both of slower ones crossed above the both of faster ones, I do apologize, crossed above the slower one, underpinning the current advance. Loss of 133.30, 133.20 zone would again shift focus down towards initial and strong support at 133.00. Then we have next good support at 132.79, low of last Friday, and of course range floor of low of 16th of January at 132.55, a break of which to signal stronger corrective action from 134.00. 132.47 is 38.2% Fibonacci retracement. 132.00 psychological support, and 50% seen as the next downside targets in case of a break below 133. 133 so far acts as a good support, as a previous break lower proved to be false. 132.55 as the power, as the subsequent rally again jumped to 134.00. This is also the previous range top and the strong barrier 133.00 that now is again acting as a good support, and holding above this level will still keep the situation in the near term more constructive for possible attack at 134.00, break of which to open 134.85 and 135.00 next upside targets. British pound, as we said at the beginning, remains under heavy pressure, continuing to travel lower with mild corrections seen after hitting fresh lows. Yesterday there was a 158.42 and a brief bounce higher stayed below 159 as initial resistance. That's also 200 days moving average with the fresh weakness seen overnight. Last night, hitting a fresh low at 158.05. The most significant thing is the full retracement and break below the previous low of 15th of November at 158.26. Of course, we need to see the clear break and the close that did not occur last night. Approximately, it was around there, 158.33. It was still close above this level, but close daily close below this level today and break below 158 is to confirm the negative stance that already exists of 163.80, and basically this will be break below the range established from September 2012, defined by 158.26 on the downside and 163 on the upside, loss of which to open way for more significant weakness. Immediate support, immediate downside target we have at 157.53. This is 28th of August 2012 low. Then comes 157 as round figure support, and 138.2% projection of the down move from 163.80 standing at 156.14 would come easily in focus in case of violation of 157.50 and 157.00. Of course, if we see the clear break below 158, that hasn't occurred yet, but according to the negative structure seen in the hourly chart and the overnights and this morning's corrective action that was capped at 158.63, and the subsequent fresh weakness, again seeing more focus towards the downside with the descending 55 days hourly exponential moving average currently at 158.80, maintaining the down move. Initial support, as said, strong one is first 158.80, then 159 round figure, and the 200 days moving average, break of which would delay immediate bears. However, regain of minimum 160.00 previous base is required to signal basing attempt at above 158.00 and allow for some stronger recovery action. Otherwise, main focus remains at the downside, as we can see the daily indicators are all firmly in the negative territory and still pointing lower. That opens prospect for further weakness. Also negative releases from UK recently, and the current problems with the snow are again threatening of further slowdown of the British economy. And finally, dollar yen as top performer of and focus pair in focus during the overnight session, dipped as low as 88.88 on the upon release of the U.S. Bank of Japan's data. Immediate reaction was a jump to 90.10 and then subsequent sharp fall that so far dipped to 88.88, as we said, retracing over 50%, breaking below the psychological 89.00 support that also marks 50% retracement of the upleg from 87.78 to 90.23. More focus seen towards the downside according to the negative hourly structure, with all indicators in the negative zone, and descending 4-hour chart indicators that are all pointing lower and holding below their moving averages, seeing more potential towards the downside. For now, 55 days exponential moving average on the 4-hour chart contained the recent weakness. Break here, of course, is expected to open further extension lower. We have immediate Fibonacci supports 88.72 and 88.36 ahead of 88.12 low of 17th of January, and more significant is 87.78 16th of January low, break of which we are talking about the level here, break of which is to confirm the top at 90.23 and the open way for a stronger corrective action. As we said, most of the action from Bank of Japan has already been priced in, and some comments I read this morning saying that basically the Bank of Japan did everything to continue the weakness of Japanese yen. Let's see how the things will develop. We are still well supported at around 89.00. We need this is first requirement to break below, clear break below 89.00 is to open way towards next strong support at 88.40 previous high, and then 88 zone with 87.78 seen as a trigger, break of which to signal a stronger recovery, and the sideline immediate bulls that by the way still remain in play. However, the reversal of daily RSI from the overbought territory, and with MACD and momentum starting to point lower, as well as stochastic setting scope for potential stronger corrective action, yet confirmation requires break below 87.78 to signal that we are in the corrective phase. Otherwise, anything else could be seen as a mild correction, and finding a support anywhere above 87.78 would still keep the short-term focus at the upside, as the pair remains in the strong uptrend from beginning of November, I would say 2012, or even more September 2012, where the price rallied from $77 to $90 so far. And finally, the dollar Swiss remains in the consolidative mode, but near-term tone is more weak. It seems that the price is losing traction as a fresh slide dipped as low as 90 to 82, cracks the initial support, psychological support, and the near-term consolidation range floor at 93.00, with the hourly indicators now in the negative territory. Immediate risk at this point is seen on the break below 93. That marks the better seen on the 4-hour chart, marks the neckline of the 4-hour head and shoulders like pattern. Break below 93 and 92.80, also strong support. 38.2% Fibonacci retracement of the outlook from 91.09 to 93.87, reinforced by now sideways moving 55 days exponential moving average, would confirm the completion of the head and shoulders pattern. That is by its nature negative and bearish. That will open way for further easing and further corrective action as the pair failed to regain 94.00. Our next upside target on upside rejection at 93.87 last Friday. As said, more focus is still seen towards the downside as long as we are holding below 93.45, 93.50, regain and clear break of which is required to shift near-term focus again towards the upper boundaries, 93.87 and then 94.00, our initial upside targets, while set break below 93.00, 92.80 is to set a scope for a further retracement, further reversal of a stronger rally from 90.80 and then 91 base opening. That will open way for a set stronger corrective action. Descending indicators in the 4-hour chart with the loss of initial bullish momentum see again increased downside risk. As long as we're holding below 93.50, more focus is still seen towards the downside as the price hovers around 93 support. We have 93.00, 92.80 strong support zone, a break of which is to confirm the stronger corrective action. Downside 92.50 is the 50% retracement, 92.15 61.8%, and 92.00 as psychological support. That will shift focus again towards 91 and 90.80. Daily structure is still holding a positive tone as indicators are in the positive territory. 92.85, this is 55 days moving average, reinforces our strong 93.00, 92.80 support, and holding above here is still expected to keep the immediate bulls in play of 90.80 and then 91.09. However, weak hourly structure and the 4-hour indicators in descending mode still see risk in the near term for possible further slide. And finally, let's see the crude oil first. There is no significant movements still in the crude oil near term price action. We are in the month of March. February has expired yesterday. We are still in the consolidative mode of recent high at 96.48 posted the 17th of January, with the range floor seen at 95.36, and still the price action underpinned by ascending 20 days exponential moving average that currently stands at 95.54 and acts as initial support along with the range floor at 95.50, range lows 95.50 and then 95.36. Positive tone seen on the 4-hour chart. Hourlies also are still holding in the positive territory, still seeing more potential towards the upside. Break risk would be increased on a break below 95.36 and 95.00. That also marks 50% retracement of the latest uplift from 93.54 to 96.48. That will allow for some stronger corrective action and possible further retracement. It's important that the price stays somewhere above 93 zone. That also marks approximately 50% of the larger uplift from 89 and from 90.00 to 96.48. That will still keep the upside in focus. There is absence of any stronger corrective action so far as the price continues to trend higher off its base at 84 level and the higher low at 85.20, with break above some significant barriers such as 200 days moving average at 91.70 and the previous congestion tops at 93.64 approximately. as well as 94 and 94.35, Fibonacci 61.8%. Retracement, seeing more potential towards the upside. A bit toppish daily studies see risk of possible consolidative corrective action, yet no firm signal being derived from this. Just is an indication that possibility exists for some corrective action, but still on the larger picture, the upside remains in focus with immediate target at 96.79. That marks 76.4% of the larger 100.72 to 84.05 descent. And of course, resumption of the uptrend, the near-term uptrend from 84 and the 85.20 would likely focus psychological $100 per barrel level last time seen in September 2012, and basically there was a false break here as the price spiked to 172, and the quick recovery showed that holding $100 was mission impossible at that time for the crude oil. Now we are in the second attempt with the more potential again seen towards the upside at this point. As long as we are holding above, I would say 94, 95, and then 93. 60, the scope is still seen more towards the upside. From the, just need to find it, Ichimoku studies just to confirm that a bullish structure is firmly in play on the 4-hour Ichimokus, as well as 1 hour, where there is even stronger as the price is well above the cloud top and holding above it's Tenkan Sen and the Kijun Sen moving averages, while Tenkan Sen now is moving sideways. This is signaling current consolidative action. I would say the consolidation is would be seen preceding a fresh rally and the attack towards 96.79 we set, and 97.00 as around figure resistance, while downside will stay protected at approximately 94 zone, 94, 93, 70 in order to keep immediate bulls in play. And finally, gold that continues to appreciate recent dollar weakness, but is still congested under recent high at 1697, but near-term tone is now shifted towards the upside as yellow metal hits 1694. So far, this is also the previous high posted on 2nd of January 2012. More focus seen towards the upside as near-term studies hold in the positive territory, and any retracement lower would be so far seen as corrective, as long as we are holding above good static support 1685 and approximately 1684. That marks also previous highs and the recent lows. Holding above these levels keeps focus at the upside. Of course, we need to see the break above this congestion clearance of 1697 and 1700 as psychological resistance is expected to open way towards our initial upside target. We just need to find this Fibonacci expansion levels. We have 1706 as the next upside target. That marks 100% of Fibonacci expansion of the upwave from 1653. This is the third wave from the recovery from 1625, and that could travel to initial 1706 level ahead of 138.2% expansion at 1727, seen at some later stages in case of clearance of 1700 and 1706. So the near-term tone is still shifted towards the upside there, with any corrective action expected to hold around or above 1684 in order to keep immediate bulls in play. Otherwise, break below 1684 would signal temporary tops just under 1700 and prove this as a strong barrier in favor of stronger reversal of the latest strong upleg from 1662 to 1697, or the larger rally from 1625 to 1697, with the Fibonacci supports seen at approximately 16 80, 1670. 1680 is the 23.6, 1670. I would say any break below 1666. That was also the previous higher base posted on last week, pardon, and the last week's also low at 1666 would be seen as the break point for the yellow metal, and this will confirm the top at 1697. Otherwise, we still keep focus towards 1697 and 1700 break, of which to open our upside target at 1706, 100% Fibonacci expansion level. And that's all from my side for this morning. If you have any questions, please you can submit them in written now, and then I will be glad to answer. We have a question for Aussie dollar. It's been some time to see the Aussie. Basically, let's take a look first to see the chart. Let's take a look first on the daily. The larger picture still shows the price action within the range of approximately 101.50 on the downside and 106.20 on the upside, but upper boundaries are now in focus as the near-term uptrend from October 2012 is still in play as the pair progresses, reaching so far 105.90, 106. So we are just close to the upper boundary of the range at 106.23. A positive tone is still seen on the daily chart, seeing a focus at the upper boundaries, at the upper targets at 106.23. This is the spike high of 14th of September 2012. Now on the near term, improve the hourly structure seen on the recent bounce. Basically, this was overnight's action after a Bank of Japan release, and the weaker dollar jumps off the supports at 104.80, 105 zone, pushing as high as 105.69. That shifts again focus towards the upper levels. This is also marking approximately exactly 76.4% retracement of the latest downleg from 105.97 down to 104.84. Again, more focus towards the upside. The clearance of 105.70, that is 76, requires also static barriers at approximately 105.80 zone to refocus 106 and open 106.23, our initial upside target, with more positive tone now seen on the lower time frames, seeing potential for a possible attack at these levels. As said, overall positive tone dominates and keeps focus at the upper targets, with the rally from October 2012 still being in play and looking for a possible attack and break above the recent range, better seen on the larger chart where we have the range defined and the price now at attempting towards there. Any failure to break above 106, 106.23 would again be signal for a further range, but this is now shown on the weekly chart. So hourly structure is still positive. Overbought conditions see potential for some corrective action. I would say ideally should be contained somewhere around the 105 30-40 zone in order to keep immediate bulls established from 104.84 and 105.00 recent rally, in order to keep focus at 105.80 and then 106.00 and 106.23. Any further question, please? Whoever was late, I just got a comment. No problem. I mean, you missed part of the session, but you can find it recorded in the YouTube. It's our page called the Windsor Brokers Forex. So in approximately half an hour, this whole session will be loaded in the YouTube, so you can view a whole session and see what you have missed. For the future also, if you are late to connect at the beginning, you can always find it recorded and see the part that you missed to see in the live session. Do we have any further question? It seems no. Many thanks to all of you being with us. Expect again, of course, to see you tomorrow at the same time. Our standard time is 8 o'clock GMT, 10 o'clock local Cyprus time. We're back tomorrow with the fresh news and the analysis for the Wednesday, 23rd of January. Until then, I wish you a nice Tuesday and, of course, very successful trading. Good luck.